Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Following an active trading session on Friday, the Australian dollar reverted back to the 60-day simple moving average, which is seen around 65.5 and was rejected. In light of the pattern, I'm still not giving up on the bullish case as of yet, and I still feel we can potentially get to the region of 66.25, 66.75 or even up to 67.20.35 area. However, from the close, the market was relatively flat on Friday. Meanwhile, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, showed mixed movement after the release of the crucial job data and also settled around 104.30, which was flat. The March non-farm payrolls, or the NFP, outperformed expectations with a substantial increase of 303,000 jobs added, surpassing both the forecast of 200,000 and the February figure of 270,000. Looking ahead to this week, the market is now keeping an eye on the next crucial data, which is the US CPI. Meanwhile, on Friday, the euro also reacted to the job numbers and, as you can see, left a dragonfly doji. From the doji, does expect to see further gains, which could lead on towards 109.05 and on to 110. It's still called in as a potential target. And from there, reassess the situation from that point onwards, as there could be much whipsaw price action again as we saw back in February. Any pullback does expect demand from 107.75 and the base holding around 107.10.25. The dollar yen, well, the market still trades sideways for the 14th consecutive day and around the Bank of Japan's intervention level around 152, which marks a 34-year high. And from there, the market is still struggling to look for a direction. With divergence in the pattern here, I still anticipate the market will move lower and reject the top side area and look back towards 150.5, which is where the trigger point is for this engulfing candle or outside range day. As a break of 150.5 should ignite the move down to 149 or maybe even lower down to 148. A whipsaw price action for sterling as well, but the market still recovering from the losses is now set or prepared to see a move back towards that topside area somewhere around the highs of 126 and maybe on towards 127.5 to 128. Any weakness, like seen previously, is snapped up, so I do anticipate this pattern to continue. After surging on Friday, the market pulled back sharply and is very whipsawed, and now expects to see the intraday range widen with 2,295 to 99 as a base and a cap around 2,334. I do feel, however, with divergence in the pattern here, could see the market snap to the downside and potentially see a pullback to around 2,266 to 69 or even lower to 2,254 to 56. Currently, though, there is no clear indication of an upside direction due to the recent pattern that's holding from the RSI and an overheated ADX. Wrapping up with oil, the market posted close to a gravestone doji and gapped lower this morning. It is assessed the market can actually see further profit taken and look towards $83 a barrel and reassess from there because 81.5 is lying beneath. Any upside attempts, the market should be limited to gains and finding resistance somewhere around 86 figure 60 area. Well, that's a wrap for the start of the week. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoyed the great start to the day.